After weeks of non-stop strikes on Gulf energy sites, Brent crude has already smashed through $114, and analysts are now warning that continued attacks could send oil soaring past $150 a barrel in the next 10 days. But here's what makes this different from every previous spike. The shortages are no longer coming. They are already here, and blackouts are spreading faster than markets can react. The Strait of Hormuz remains effectively non-operational. Mines, fast boats, and repeated threats have reduced tanker traffic to near zero. 20% of the world's daily oil flows and a massive share of LNG exports are now blocked. This single choke point is rewriting global energy in real time. Gas prices at the pump are climbing 30 to 40% across Europe, Asia, and the United States. Drivers in Germany, Japan, and California are already paying more, and the increases are accelerating by the hour. Shipping routes have been rerouted around Africa, adding 10 to 14 extra days to every voyage. Container ships and tankers are burning more fuel on longer journeys, driving up costs for everything from electronics to clothing. Supply chains that once moved smoothly are now slowing dramatically. Fertilizer shipments are stalled at the source. The world's biggest producers in the Gulf are offline, threatening food production in Asia and Europe. Farmers from India to France are facing higher input costs, and the first warnings of crop yield drops are already appearing. Food prices are set to follow. Europe is entering another full-scale energy crisis. Natural gas storage levels are dropping faster than planned, and governments are quietly preparing contingency plans for rationing. Households in Germany and Italy are being told to prepare for higher heating bills this winter. Some are already being asked to cut usage immediately. Asia's import-dependent economies are scrambling. China and Japan are desperately seeking alternative suppliers, but there simply isn't enough spare capacity to replace Gulf volumes. Power plants in several countries have already begun cutting output, and rolling blackouts are being reported in parts of Southeast Asia. The United States is not immune. Domestic gas prices are rising weekly, and discussions about releasing more from the Strategic Petroleum Reserve have restarted. American consumers are seeing the Gulf War reflected directly in their weekly grocery and fuel bills. Recession fears are growing worldwide. Economists warn that prolonged oil shortages at these levels could tip fragile economies into outright contraction. Stock markets remain volatile, airlines are canceling routes, and manufacturers are warning of production cuts. Yet the cycle of retaliation shows no sign of stopping. Each new strike on energy infrastructure reduces capacity that cannot be replaced overnight. Insurance premiums for tankers have skyrocketed, making many shipments uneconomical. Global markets are now pricing in months, not weeks, of disruption. The next 10 days will decide how deep this crisis goes. Watch for 3 critical signals: sudden jumps above $120 per barrel in a single trading session, further confirmed strikes on additional Gulf facilities, any new reductions in tanker traffic through alternative routes. Those are the triggers that turn today's shortages in permanent blackouts and rationing across entire continents. This energy war is no longer abstract. Blackouts in one region and empty fuel stations in another are now directly linked. The global oil crisis is here, and it is affecting every economy on the planet right now. The question everyone is asking is simple: how long can this continue before the damage becomes irreversible for global growth? The world's most critical energy routes have become battlegrounds. Every tanker that cannot load in the Gulf creates shortages thousands of miles away. Europe is bracing for winter shortages. Asia is rationing diesel. And American families are paying more for groceries because fertilizer costs are rising fast. The ripple effects are already visible in everyday life. Higher fuel prices mean higher transportation costs for food, medicine, and consumer goods. Airlines are cutting flights, shipping companies are raising rates, and factories in import-dependent nations are slowing production. This is the global oil crisis unfolding in real time. And the most concerning part is the speed. What started as a regional conflict has now created worldwide supply gaps that cannot be filled overnight. The coming 10 days will show whether the shortages stabilize or whether we see even bigger price jumps and deeper blackouts spreading further. The entire planet is now paying the price for this energy war.